Hey traders, Jason here from Leavitt Brothers. Happy Thursday. I hope you're well. I've been asked if the kiss and cross trade I use with Stochastic and MACD works with short trades. Okay, the answer is yes. So I'm going to go through some examples here. But first, for the record, I just want to state that I am mostly a long trader. That's where I make most of my money. So when the market heads down, my first goal is to protect what I have. And then if the move down lasts a long enough time, I'll look to go short. But the reality is the market goes up a lot more than it goes down. So that it pays to focus on the long side. Case in point is what has taken place over the last 2 months. If all you did was protect your downside when the market started down, and then you went long near the bottom when you got signals, you did great. Even though you missed the entire move down, you still did great. Also, and you know this, realistically on the way down, you're going to nail 20, 30, 40% moves. Okay, the max obviously is 100%, and that almost never happens unless you hold a really bad stock for years and years. But on the way up, especially during volatile times like right now, you can make 100% in a relatively short period of time. So it pays to be focused on long trades. Okay, nevertheless, here are some short examples with my kiss and cross setup. All right, so here's AMD, and this is just kind of, I'll just walk you through, what I look for. All right, so we have stock goes up, we have negative divergence here, we have a cross, stochastic crosses. Okay, once this crosses, okay, and goes down, what happens is the AMD goes down and it goes up one more time, and that one more bounce lacks energy. So all it functions to do is it allows the stochastic to cycle up and roll over, and the MACD just comes up and kisses and then continues down. Okay, so this is the setup I look for mostly on long trades, where you get a divergence and a cross, then there's one more move in the direction of the trend, but that one more move lacks energy. It lacks enough energy that you don't get a recross of the MACD in the stochastic cycles and then cycles down. So then you get another short signal over here, and then you can see what happened. Okay, how long you hold is just going to depend on the stock, depend on what's going on. We've had a lot of these play out where a stock has moved down for just a couple days and then it just immediately recovers. Okay, but that is the signal. Okay, let's look at a few more. All right, here is Simon Property Group. All right, so we have negative divergence, boom, boom, stock drops, kind of finds support at the 21 here, but it drops. You get a cross here, you get the stochastic, which had cycled up to a high level, crosses down. Okay, so then you get a move down. Then on the subsequent move up, all that happens is the stochastic cycles up and then starts down, and the MACD just simply comes up, kisses, and then bounces off. Okay, so this move here lacked energy. MACD didn't cross up, so this ends up being like a continuation of the move down, and then the stochastic helps with timing. Okay, this is pretty common. Okay, I don't want to say the MACD is long term and the stochastic is short term. Okay, I'll kind of say that. See if I can write the initials here. But the MACD is longer term and the stochastic is shorter term. So while the MACD stays in trending in one direction, the stochastic will oftentimes cycle up and down, and so each one of these would be an entry. Okay, and that's what I'm looking for here is like MACD pointing down, trending down, and then I use the stochastic as like a timing mechanism to get into trades. All right, here's CapitalOne Financial. Divergence, same thing as before. You don't need a divergence, but I kind of like to look for them. My eyes are drawn to them. So you got a positive divergence or negative divergence here. You got a cross here. Stochastic crosses down. Okay, we don't really get any type of kiss here. Just the longer term. Again, not long term, but longer term. MACD is trending down, so that tells us our bias should be to the downside. So what I'm looking for is, while this stays in the trend down direction, I'm looking for the stochastic to move up and then cycle down. In this case, all it did is move off its low. It didn't even get to the midline, and then it cycled down, and that would have been like right here. And then by the time the stochastic actually got to a high level and cycled down, which is ideally what I would want, you're already getting a positive divergence here and a likely end of the trade, and that's exactly what happened. Okay, some of these are playing out very well, but the reality is, like right now, I'm showing you examples from just like the last 2 weeks, and if I could back this chart up, you'd see that this thing came from like way down here. So this move here is just actually a dip within an uptrend, not part of a downtrend. Okay, so because you're doing a dip within a bigger uptrend, it doesn't last very long. It dropped from 60s down to the low 50s, which is still a pretty big move. But the fact that it only lasted 3-4 days is actually normal, because it is only a dip within an uptrend. Okay, but yeah, the trade is still there. Okay, you're looking for a cross, you're looking for a trend with the MACD, and then you're using the stochastic for timing purposes. Here's DuPont. Okay, negative divergence, boom, cross. This was already heading south. While this stayed in the trend down direction, you got a cycle up and a cycle down. So if you're short there at the time that this stays trending down, then you're going to be short in here, and then I guess you get lucky because it gapped down and does that. Okay, so the trade only lasts like a day and a half. Okay, but it's there. That's a setup. The setup is there. You can see what it is. Let's look at lows here. Yeah, 2 more. All right, so lows, same thing, similar setup. Okay, we got negative divergence. Okay, MACD crosses, stochastic crosses down, lows bounces one more time. That bounce actually made the MACD cross up, but it was very brief, and then it crossed back down. That bounce also enabled the stochastic to cycle back up. So coming into, when we're up here, coming into the next day, I'm thinking this thing could break out, and MACD is going to cross back up and negate the trade. And the stochastic is probably going to do one of these things where it kind of hovers at the top for a while. Or, see if I can delete a couple of these. Or it could move down, in which case the MACD would get rejected here. The stochastic would continue down, and you'd have a short trigger. And this bounce functions as nothing more than, we got the signal here from the MACD divergence, we got the cross and cross, and this is just that one more move in the direction of the trend that lacks energy, and then the reversal takes place. So what happened is you got a big gap down, and that, I don't want to say destroys the trade, but if you get a huge gap down and then you're starting to trade at the bottom of a range, the trade isn't over, but it changes. Like at that point in time, I'm kind of just sitting back and seeing what happens. So I didn't take this trade, but I'm just showing it as an example that sometimes you get a good signal, or sometimes going into a day you have the potential for a good signal, but then you get a gap down and sell off the first couple hours of the day, and there's nothing you can do other than sit back and let the chart reset and see if another trade forms. Maybe it comes up, gets rejected by a moving average. Maybe this stays in the crossed down direction. This cycles back up and signals again. You can get a short here as it gets rejected by the 21, and since the 21 was support there and resistance there, a little bit of support there. When if a moving average proves that it's important, then you can trade around that. So there could have been a short here, but then once the stochastic starts doing this, I consider it's no longer the same trade setup, because I want like wide swings in the stochastic. I don't want this herky-jerky, jiggly stuff right in the middle. So trade is there, didn't play out that great because of the gap down, didn't play out that great, shorting this bounce, but that's trading. Okay, not all of them work perfect. All right, last chart, Costco. So we have really nice, smooth action, negative divergence, cross, cross, everything's in place. MACD pointing down. And again, stochastic, instead of cycling back up, I want like wide ranging cycles. All it did is move up and then move back down. Okay, so there are entries here, okay, because the MACD is pointing down, this cycles up and then goes down. So there's an entry there if that's your thing. By the time, but then stochastic cycles down and crosses up, the MACD is starting to lose its energy. So you got to look for some sort of bounce, especially as you're coming into, a previous price low, plus you get the 200 moving in here. Okay, so the answer to the question is yes, you can use the kiss and cross trade on short trades. It works exactly the same. There's no reason why you can't flip the charts upside down and trade the same way. Just know that the market moves, for me personally, the market moves up a lot more than moves down. I'd rather focus on longs than shorts. There's a lot more money available going long than going short. That's just my thing. So if the market heads south, my first thought is protect what I have, and then I'll go short later. But nevertheless, it's a simple strategy. All you need is like a simple strategy that works, something that fits your personality. Get good at it, and then size up when appropriate. Okay, if you get really good at a particular strategy with 100 shares, 200 shares, and then up to 500 and 1,000, 2 years later, the exact same strategy, exact same trades, you're doing 5,000 shares instead of 200, and you're making 10 grand on a trade instead of 400. Okay, everything else is the same. So that's your goal, is to find a strategy that works, stick with it, get really good at it, and then once you're good at it, then you can size up. All right, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button. Check out Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. There's a link below. Also, check out my mini masterclass in trading. It's free. There's also a link below. All right, again, thank you, and we'll see you next time.